Okay, good day everyone and welcome for today's financial hearing with Clas Ohlson. I also like to welcome everyone participating via the webcast and telephone conference. Moderator today is Martin Arnell from ABG Sundal Collier. He will be back later and lead the Q&A session. But I now hand over to the CEO of Clas Ohlson, Mr. Klas Balkow.
Thank you very much, and of course let me also welcome you to our second quarter financial report in the financial year 13-14. As a top line on the report, I think we are very pleased to note that we are growing in all markets, and we are particularly, I think, pleased with the reception of the autumn range and the assortment that we have released this year that have had a great response from our consumers. This has led to a healthy gross margin and also to a clear profit improvement versus last year. But I will go through this in more detail when we cover the report. And today's agenda here is that we will go through the key ratios for the second quarter, as well as our first 6 months in the fiscal year, as well as I will give you an update on some of our strategic initiatives that we're working on. Before that, to sum up Clas Ohlson today, we have a rolling 12 turnover of 6.6 billion SEK. We operate in an omni-channel structure with 182 stores in 4 countries. We have a lot of energy in the organization at the moment with great co-workers, but also things supported by some of the recognition we have received this fall in terms of voted as from the consumers as most trusted brand and also the second strongest brand in retail in Sweden. Let's go into the key ratios for the second quarter. Sales, top line, we are growing with 6% in local currencies. We have some impact from particularly the Norwegian krona, so we are reporting a 4% growth in SEK. On a like-for-like basis, we are increasing our sales with 1%, and we have fewer new stores versus last year. We opened up 14 stores in comparison. Again, we've seen a positive development in general in all markets, and also a positive development on particularly the range that we have launched with all the news that we have sent out to the market, which is overall pleasing. Maybe more interesting by market, if we take a view on overall markets, and we used to look at it from a consumer confidence perspective. And first, Sweden, we're coming from a somewhat lower level, but there are clear note from a consumer point of view that we have a gradual improvement in Sweden, particularly compared to last year. I think this is also reflected in our sales figures, where we are growing with 4%. We have 2 more stores that we've opened up in this quarter, and we have 4 more stores versus last year. And we have seen, and we are clear seen some effects, and we are pleased with that, with some of the efforts we have done in marketing, and particularly, I would say, supported the loyalty card has supported both the sales and our brand position in Sweden that is giving clear effects. I'll come back to the details about our Club Clas initiatives a bit later on during the strategic update. Overall in Norway, on the market, on the other hand, we have some signs of that the consumer confidence is being a little bit more weakened, still coming from a high level. I think, though, this is not reflected in our sales numbers, as we are growing with 8% in local currencies. Here you can see the clear effect of the weakened Norwegian krona versus the Swedish one, as we are reporting a 2% growth in SEK. But also here we've seen the same pattern as in the other markets in terms of consumer acceptance of our range, but also some of the marketing efforts that we have done during this period. Finland still in a challenging period where we have not seen any uplift in the consumer confidence during this quarter. somewhat reflected in our figures, even if we are growing with 10% in local currencies in Finland. This is supported by more stores in the network, but it's clear that we continue to strengthen our position in the Finnish market, and we are building up our brand, and we are taking clear market shares in this market, even if it's currently soft consumer confidence in the soft market at the moment. UK continued to move in the right direction in terms of consumer confidence, even if we have seen somewhat a dip in October, November. I'll come back to that. We talk a little bit more in the UK later on. But but in general, the direction on the consumer and the consumption in UK moves in the right total direction. In the quarter, we continue to grow. We continue to take steps in the UK. We have a positive sales trend. Even if what we have seen in the later part of the quarter, we have seen a somewhat slower growth versus the beginning of the quarter. But this is very clear correlation with some of the marketing investments we have done as we are now moving up and building up our brand awareness. And this slides behind me here, you see that the brand awareness goes in the right direction. We had some efforts of marketing in the summer. We have not been so active on marketing during the fall. We've started the marketing program back again in November, and we clearly see that starts to tick up again. And we will continue this journey to drive our brand presence in this important market for us. Moving from sales into our gross margin key ratio. In the quarter, we have seen a favorable gross margin development with 1.3 percentage points, which is mainly related, I would say, to three areas. Our sales mix, as well as our lowering sourcing cost and some currency effects. Even if the later one has not been favorable, but it's an impact and it's the variance of the NOK and the dollar. So let me just go through each of them, of these three areas. On the sales mix, we've seen a very positive sales mix effect in the quarter. Some of that is influenced by these areas. You have the countries, you have the categories, you have the brands. And if I will comment a few of them, the categories go in the right direction as well as the brand mix. We continue to drive our private labels, and we continue to see that goes in the right direction. But also the way we sales steer and the way we promote our products, we have seen a clear positive sales mix effect during this quarter. Going into the sourcing, we continue to drive the efficiencies in our sourcing, and we are taking steps by steps in terms of our direct sourcing. However, in this quarter, the biggest impact has actually been the freight costs. And seen on the slide here from a schematic picture, last year when we sourced for the second quarter last year, we had a peak on freight costs versus this year. It's been a dip. So the difference here has had a clear impact on the gross margin, and we looked at it from a total perspective. You can also see this will balance out as we move along, but it's been a clear effect in the second quarter. Currency effects, the NOK, as we talked about, the Norwegian krona, yes, we are on a sliding journey here, and we see that we are impacted by the NOK, and that, as everything equals, will continue to be impacted on the NOK. In this quarter, it's been very much balanced, but that we have strengthened our SEK versus the dollar. So this is not fully, but it has balanced up some of the NOK effect in this quarter. Even if long-term everything equal, we'll also see that the dollar will also flatten out the effect of that coming quarters. This has led to a gross margin improvement, and if you see the long term, we are continuing to drive and having a positive development on our gross margin based on some of the programs that we are doing, particularly on the sourcing, but also on some of the sales mix effects that we are getting. Going into the share of sales cost, it's been unchanged in the quarter. And if you look at, we have fewer stores that we've opened up, but more importantly, on a like-for-like basis, we have increased cost on a like-for-like for rents and for salary inflation, etc. This has been very much balanced by an improvement in our like-for-like sales, but also that we continue to do efficiency measures and improving our productivity on the total base of our operation. This sums up to a profit that has increased by an operating profits increased by 23% in the quarter to 126 million versus last year 102, and subsequently led to an improvement in our operating margin to 7.5, and an EPS that is increased by 31% to 1.49 krona versus last year 1.14. That was a quarter from a key ratio perspective. If we move on, looking at the first 6 months, one could almost think that the numbers here are a typo, but it's actually more or less the same numbers actually, and it happened to be that way. That sales is improved by 6% for the first 6 months. Same currency effect of 2%, so we are reporting a 4% growth. We have a like-for-like of +1, and we have 14 more stores this year versus last year, leading to the profitability that has improved the first 6 months by 8% to 218 million SEK versus last year 203, and an EPS growing by 13% to 2.59 Swedish krona versus last year 2.29. We continue to invest in Clas Ohlson, even if the investments in this period is lower than last year, mainly related to fewer number of stores, but also that we have slightly less IT investments this period versus what we have had last year. And reminding of that we are working on a new IT platform, and we are in that design phase, so some of that investment has not come into play yet, but it will come as we move along. But in this quarter, somewhat lower investments in general. Cash flow is positive and strong. We are reporting 172 million SEK in operating cash flow. The inventories is somewhat higher, but if you look at the turnover rate in a distribution center, really goes in the right direction of 6.9 versus last year turnover of 6.6. In this quarter and in this year versus last year, we have taken in our stock slightly earlier to the Christmas period versus last year. So that is some effect on that on the inventory level. Reminding also that the inventory includes 14 more stores versus last year. From a net debt perspective, we have a net debt after the dividend payment in this quarter of 63 million SEK versus last year 142, so also in the right direction. That leaves some of the ratio reports for the quarter. And obviously this period of time, when we are looking forward to a Christmas, we are also reporting the start of the Christmas period. We are reporting the sales in November of +9% in local currencies. Positive growth in all markets. Coming into even if we look at UK, we are growing in the UK, but there are clear signs in the UK in total that Christmas trading has started significantly later versus last year. Still there's a positive growth. We have 11 more stores in the network, and we see this as a good up trading for the coming Christmas period, which we are pleased to note. Let me then move on, looking into to our strategic initiatives and give you some updates on that. Realizing also that we have the snowblower here, so we hope to have some snow because we still have a few in stock if you're interested. So and hope that will come. But that is not the most strategic initiative we have. One of them that we are working on is the omni-channel strategy, or you can call it a multi-channel, omni-channel, but obviously the omni-channel, how the various channels that we are offering the consumers should work in a seamless way. And it's a core strategy for us. And we are pleased to see the effects that we have seen so far of the new platform, of the work of the structure we're working on, where we clearly see some effects on how this starts to work. We still have a long journey to work in this area, but we are clearly dedicated to that this is the right direction, and we continue to work on this. Let me go through just a few areas in this strategy. Store development, the base that we have, and of course a critical part to continue to develop our stores. We continue to convert into the new store concept. We continue to improve the store concept that we have. We are optimizing our locations. We have the various formats now where we from the various sizes of the stores, where we are optimizing based on where they are located, and we're moving forward in some areas where we're moving stores. And we continue also to open up more stores in our network with the target of 12 to 17 stores. This year we've opened up 8, and we have a few more to go. We have contracted 9 stores in the pipeline for the coming 2 years. Going to online, and again, I think we're pleased to see that the online platform drives significant traffic to the various channels that we have on online, if it's a mobile or if it's the web. And it's also clear to see that this traffic also generates sales and traffic to our stores. Many consumers prefer to buy the products online, or they prefer to look up the products, see where I can find it. Is it existing in the stores that I want to go to, and I'll go and pick it up in the store. So we have a good base, and for us it's important that we offer 24/7 where the consumers for them to select where they want to make their purchase. And we'll continue this journey. We'll continue to add more initiatives in this in terms of dropship or pick up in store, etc. So we've started, but we see some clear positive effects of the online platform in terms of how it drives the total sales in all our channels. Another area worth commenting on is the loyalty program that we launched 8 months ago. We start to see this as a very successful launch. We are now above 600,000 members of Club Clas. Clearly positive effects in terms of frequency, increasing ATV, and obviously also loyalty. But of course, mostly important, it's a fantastic communication tool for us where we can reach out, we can learn about the consumers, we can learn what they want to have, we can also communicate to them in a very efficient way. And as we move along, we will now start to plan to launch the program out into further markets. In addition to this, of the omni-channel strategy, we're also working on to increase our offer to more segments. And we are looked into, as we have communicated, into the B2B segment, where we are focusing on small to medium-sized offices, where we can see that we have a range that fits very well. We have a great offer to them, and we are working now to make it easier for them to shop at Clas Ohlson. We call this the Clas Office, and we are planning now to launch this in first half of 2014, and project works according to plan. Another key strategic initiative are the further international expansion. Our preparations for going into the German market is moving on, where we plan to open up 1 to 2 stores in Germany at earliest 2014. We also working on our latest initiative that we have announced, the new operating model of a franchise model with the Al Masai Group in the GCC region, where we plan to open up 2 stores in either Dubai or Kuwait in 2014. And also these initiatives is going in line with our expectations so far. This sums up my presentation, and I think for us it's very much of that we continue to grow, we continue to strengthening our position. We have a strong financial position, and we have improved our profitability, and I think we have a clear agenda and a clear strategy to further grow our profitable sales as we move along the coming years. With that, I'm sure there are some questions.
Good morning, everyone. Before I let in the floor for questions and also the web conference, I'll start off with some of my own. Could we start talking about the sales development, the improved sales development, especially since we have seen that since October and also the very strong numbers for November. The drivers of this, is it purely market, or traffic increasing, and have you done anything on prices?
No, I think the main key drivers is we've launched the what we call the autumn range that we launched in mid-September, with which has become a symbolic with a new catalog release that we've seen, and in this we've seen a very positive consumer reaction on that. We've also, I think, need to say that the co-workers, in particular the one who meets our customers, have done a fantastic job, as well as we have improved our marketing efforts and strengthening that, and have seen a better efficiency in that work.
Are there any products that you could highlight that clearly stands out lately?
I think Clas Ohlson for us is, when you get this question in terms of what's your favorite and all of that, I mean the width of the range is, I think, the core of why we are popular to the consumers. Some of the subcategories that has a very positive development at this time is the electrical, the low energy, the LED lighting is doing great, the storage is doing great, in terms of multimedia, the network improvement, etc. in your home is having positive. But I can continue. There are many areas that I think, but in general, it's the width of the range that is having a positive impact.
And is that also what explains the favorable mix in the gross margin, that you have strong performance by high margin products at the moment?
High margins, or you can also say that the mix is influenced by many things, and as I try to present that you have the various subcategories, but you also have in terms of how we have promoted the products and how we have in terms of what are the campaigns we have lifted up, etc. And we have seen a positive mix in that margin cocktail.
And the 9% growth in local currencies that you presented for November, is that a level that we should see also going forward, or is there any one-offs in there, like calendar, etc.?
Well, what we'll see going forward, we will see. But I think what we can look at, if we look at November, it's been a positive development. It's one more Saturday, if you look at that from a calendar effect, and that could correlate to 1.5% to 2% positive calendar effect. So that needed to be calculated into it. But I think in general terms, what we can conclude is that we've had a positive start for the Christmas trading with a 9% growth in November.
Are you also referring to the start of December when you're mentioning Christmas, I assume?
No, I'm referring to November, which is what we are presenting here. Okay. So, but I mean, when we look at Christmas, it's not only December trading, it's very much the range that you find in a Clas Ohlson store is very much, many consumers go into a Clas Ohlson store, and it becomes the start of the Christmas trading with the lightings, with the decorations, and with all the fixing that needs to be done before you get into the Christmas presents.
And when it comes to the different markets, are there any market that you would specifically highlight? Like Finland, I noticed was strong in November.
Well, I think it's a good point, and I think must say that I commented on the quarter that we've not seen any uplift in the consumer confidence in Finland in the quarter, but clearly November is strong for us in Finland. It's a clear step in the right direction. So if that's us or if it's a consumer, we'll have to see. But we are pleased to see that it is somewhat a step change in Finland in November versus the previous months.
And if we could move on to the gross margin performance in the quarter and what you expect going forward here. You mentioned that you have lower sourcing cost and you mentioned the freight cost. Is there anything structural in here, or should we expect it to come down to a bit lower levels going forward?
But I think if you look at the freight costs, the freight cost had both a peak and a dip, and that becomes a fairly big impact in this quarter. Over time, that now depends on where the freight costs will go, but as it looks, everything equals today, that will flatten out. In terms of currencies, also everything equals, we continue to see that we will have an impact from the Norwegian krona, and where the dollar, that we've seen on the charts here, that the dollar has balanced this, and this quarter it will not have the same effect as we move along. Everything equals. We'll see where that goes. And then, of course, the sales mix is up to us, and but it's also very much up to the consumer. So that's difficult to predict. We are working on to optimize our sales mix, but it's very much clear for us that we want to make the consumers the best offer, and in the end, that's the consumer who chooses.
Is it possible to comment on the net impact from currencies on the gross margin in the quarter?
The net impact on currencies has been negative in the quarter.
Okay, thanks. Any questions from the floor at this stage?
Morning, Niklas Färm, SEB Equities. I'd just like to continue on the gross margin performance. It's really, I'm just looking at the chart, like for the past 13 or 14 years, it's clearly the best margin you ever recorded. So if we turn the question around, is there something structural which you actually think that lies ahead of you that you can extract out of your business in logistics, distribution, shipping, all aspects of the gross margin?
I mean, the whole thing in terms of gross margin, we talked the efforts we started a few years ago in terms of sourcing more from our own and reducing the cost in that perspective, and that we continue to grow in that area, even if this, as I said sometimes, that the largest steps has been taken. Now, of course, that is also critical for us that we have an efficient operation, and if you're looking at the turnover at the distribution center, we start to become more and more efficient. That supports. We've had some time with some negative currency impact. Now we've this quarter has not been, it's been a bit somewhat balanced, even if it's slightly negative. And for us, it's what we have. I think what we're working on is to continue to drive our sales mix and continue to drive the efficiencies as well. So, but in terms of the structure parts, it depends a bit on where it goes. What we can control is some areas, and some of the areas we cannot control in that perspective.
May I also
to answer your question?
Yes, thank you very much. May I also touch on another previous question on like-for-likes? The 1% you actually report for the quarter, how does that break down into footfall, prices, and mix, please?
Well, I mean, if you look at what we have seen, I think I've commented on that during some time, that the traffic has been the weaker point in the overall macro environment. We have seen less traffic to the shopping centers and less traffic to our stores. We've seen an uplift in traffic in this quarter, which we're pleased about to see, as well as we continue, and I want to comment on that, the great work that has been done in the stores in terms of the conversion is going in the right direction as well, which is pleasing, as well as actually also the ATV is somewhat so all areas is moving in the right direction, I'd say.
Thank you very much.
Yes, hi, Stellan Hellström, Nordea. Also coming back to the gross margin, maybe you can give us some kind of indication of which of these three mix factors that you mentioned are the more important categories, your brand work and country mix. I would actually presume that the country mix is negative in this quarter.
Well, that's yes, we don't comment on that, but let me then answer the question of that more of the categories and more on the brands, as well as one area that has been gone in the right direction for us has been the campaigns that we have worked on in this versus last year.
Have you raised prices? Maybe. Given the new catalog, you did see the Norwegian krona weakening at the time of your publishing of the catalog. Was that part of the plan to compensate?
The room for increasing pricing in the markets are very limited, but obviously we work constantly on trying to adjust in certain areas. We have reduced prices in some areas where we've seen that reflected in the market, as well as we have picked up in some areas. But the room for increasing pricing are somewhat limited, I would say.
And the gross margin improvement, is that sort of evenly spread across the countries, or is it certain countries that have better improvements than others?
In general, you can say we've seen an uplift in all markets, even if you look at the currency effects of the Norwegian is of course putting some pressure on the gross margin.
Okay. Finally, also a question on your share of own brands. What is that level now compared to a year ago?
We are now up at 27-28%, which is an improvement from with a couple of percentage points as we've looked at it.
Thanks.
Okay, thank you. My name is Rebecca from Seabury. I was wondering what percentage of the total increase of sale is due to online shopping?
Well, online, it depends on. If you look at the pure channel online, as we are also reporting, it's been flat in November and it's been slightly down in the quarter. But that things needs to be put in perspective. That last year we had some launch effects when we launched the new platform in our various markets. So on that perspective, it's not driving the sales pure that channel. But as I commented on, we've seen a great traffic increase to the online, and we can clearly see that drives traffic to the total operation, to our stores as well. So now it's somewhat difficult to exact measure how big that impact is, more than that we can see the flow of the customers where they're going. And then of course if that then ends up to a purchase, that is difficult, but we can you can make some assumptions around that and see that you get a positive effect in total.
Another question related to that. What is the conversion ratio on the online shopping?
Well, that is, I think that is a detail that we at the moment is not releasing to the market from a competitive perspective. So sorry about that.
Okay, thank you.
Just a follow-up question, if I may. It's still a fact that there's no operating leverage in the business. You record net sales growth of close to 4% in the quarter, and operating expenditure are growing slightly more. And you just said that there's basically no store openings in the quarter, so that type of cost is obviously much lower compared to in Q3 a year ago. Sorry, Q2.
You had 14 more stores last year.
Yeah,
so
sorry, but expansion costs I'm referring to are pretty much down half. So what would you say is how does like-for-like cost growth developing in the quarter?
Well, I think as the number of new stores are not as many, but they are still versus last quarter, and we are managing to balance that to have a share of sales cost that is equal. Due to that, we are somewhat more efficient. We have, of course, if you look at, you have rent increases, you have salary increases, and we've been able to balance the majority of that through productivity measures, as well as, of course, the like-for-like sales is supporting that.
And if you look at the cost plans going into your second half or fiscal second half, do you expect this kind of similar trend in the relation between sales and cost developments, broadly speaking?
Well, you're into forecasting, but in general terms, I mean, we'll continue with the operation we have, and of course that has some the cost structure has some impact in terms of the initiatives we are doing and all the efforts in that perspective. I don't foresee any large efficiency measures that we can do. I think we worked on becoming more and more productive. I think we are fairly productive as it is currently, so there are no big programs in that going forward.
If I just may, one final follow-up question. Could you just give us an idea how earnings are developing in the UK business? I mean, as you said, sales are still a bit sluggish perhaps, but then again, you're not growing the business. Could you give us any update? You previously said it's going to cost you about a percentage or two on the operating margin.
Well, we are growing in the UK, and that supports. I mean, we have the same number of stores. So we are growing the operation in the UK. That helps also on bottom line.
Thanks.
Yeah, Stefan Wikholm. Your top line growth is quite decent, but your organic growth is again low, 1%, and we have become used to see that. And I suppose the reason for that is that your business idea has become pretty mature, and also the competitive situation in the market has changed dramatically. For example, in Sweden during the last 5-10 years, it's a quite different situation today.
Correct.
You have tried to counteract this by moving into new countries. And my question to you now, after having been on the international scale for a few years, are there any differences in the local competitive situation? Can you tell us a little about country by country, the way it looks? Are there any low-hanging fruits, or do you have to struggle in each market?
No, I think if you look at it, and I think you made a very valid reflection, if you see Sweden has been the increase of competition, or what I would say choices for the consumers in terms of sales space has almost doubled the last 5-6 years. So it's a different climate in that perspective. So competition is strong, but it's also strong in all markets. Even if I look at them, taking Finland, you have various competitors versus you have in Sweden. Norway, the same, and you see some of the competitors is starting to launch into Norway. The UK market, you also have strong players in the UK. However, I think that the one of the strengths that we have in terms of where we locate and where we are making operations, it's very much where we are unique. And the mix that we are offering to the consumers. And the pleasing when we go international is that we get that feedback a lot from our consumers and our customers. Now, I think that we also need to realize that it will take some time to build up a brand. We've been present in 95 years in Sweden. Of course, we have a strong benefit from that. But we clearly see now in taking the UK market, we start to build up the brand, and you start to see some effects out of that.
But you choose to move into 2 new countries, again, instead of expanding in the UK, for example. Maybe you are going to expand in the UK a few stores as well, but I mean, if you put all the efforts in the UK instead of putting part of them in Germany, for example.
No, but we look at it, and of course, that UK and every market is somewhat unique, and we've seen the way we look at it, and the research we have done, as well as the feedback we are getting from the Germans being up here, etc., is that there's a very positive reflection on that on Clas Ohlson coming into Germany. So. Having said that, what we are doing and what we will plan to do is to open up 1 to 2 stores, which will balance our profit impact on that, and to get that feedback if the theory that we are seeing that we want to have is also realizing in practice when we're opening up.
Thank you.
Erik Sandstedt, Handelsbanken. Got 3 questions. Firstly, I'm just wondering whether you're seeing any sort of market weakness in Norway relating to the housing bubble or worries, call it. Well,
no, I think, Erik, what we have clearly seen from the consumer confidence, you see a dip. We also sense that in some of the shopping centers, but it's not reflected in our figures.
Okay, and then coming back to the UK here, just wondering whether you're leaning towards either scaling up or scaling down the business, or whether you're happy with 12 stores. I suppose some of your contracts now have actually reached the time of exit options. So is that something you're contemplating for some of the stores, or how could you tell us a little bit about that?
No, I think that the focus at the moment is to continue to build the brand, and we want to see that is reflecting into our sales figures, which we have seen, and we want to see more, obviously. That doesn't disqualify for that. We may move 1 or 2 stores if that comes to the case. But in general, we are continuing to drive the current operation that we have, and we want to see some of the effects of building up the brand, relate that to sales performance in the current network.
But if you see these positive trends continuing with positive like-for-like sales, improved brand awareness, are you more likely to actually scale up the number of stores? Because I suppose with only 12 stores, it's going to be difficult to reach break-even.
Well, is continue to see that positive. That opens up then for scaling up, but we are not there yet. No.
And then just finally, do you guide anything on CapEx for this year and next year?
Not more than we will be, I think, as we've seen, we are somewhat lower than last year as it is at the moment. We have also, it will be impacted by a number of stores that we will release in the Q3, but also as we have announced that we're also working on a more IT investments, as we have announced as well.
Thanks.
Okay, I'll continue with actually, first of all, a follow-up question on the private label share. You mentioned that you have 27-28% at the moment. What did you have a year ago, and where do you see this in a couple of years from now?
I think it's a gradual improvement, and it goes in the right direction on that. But what I also think that the mix for us is important. We had a target a few years of coming up to 25. We were, I think a few years ago, we were 15, 16, and we've grown that up to 25. We passed the 25. A reasonable target is up to 30% to maintain that mix. But then I think also, of course, for us, which we have seen, is that we now have 5 and 10 years guarantee on our private labels. We have improved in terms of our design, in terms of our we're working on the series of products, etc. And as long as the consumers likes what they're offering, of course, that needs to be the consumer to choose and to select, rather than we are saying it's going to be 28 or 32.
Okay, thanks. And then I would like to ask you about the traffic. I mean, 6 months ago you mentioned that the traffic was down overall in Sweden, and now you're saying that it's up. How much up is the traffic at the moment?
I said it has improved, which is pleasing, because we noted a clear traffic drop for some time. Taking a year ago, if we look back, we had a challenging fall in general retail, traffic drop in the shopping centers and so on. And I think we have now seen that is stabilizing, and it's also somewhat improving. So without going into details on the key ratios, but it is traffic is somewhat better now, which I think is positive to see.
Are there any store locations that stands out, the ones in the large shopping malls or the ones on the high street, etc.?
It is a very much of a mix where I would say you will find some cities that's more related to the city performance, where shopping has for some reason moved out or moved to various areas. I think it's no secrets in terms of that. Like the Stockholm region there's a positive momentum in Stockholm in total, in general, etc. So but then it's more related to various cities and various shopping centers.
And just a final question on the top line performance. When it comes to Clas Ohlson's performance versus the market, would you say that you are taking market share in your main markets at the moment?
I think the way we measure it is a total. What we look at from Sweden, for an example, we looked at HI's data and based that on the categories that they are reporting and taking a mix out of that. And from that perspective, we are clearly seeing we are gaining market shares. We will also say, if you look at total in Norway, we're also gaining market shares from the data that we have.
Okay, thanks. And we mentioned the OPEX performance in the quarter. Was there anything else there that you would like to highlight when it comes to cost for new stores and personnel cost, etc.?
No, I think it's reflected of that we have fewer store openings compared to some years ago. We are more efficient now in terms of opening stores in general. So there are no major changes from that versus last year, as an example. So it's more of the number of stores. We continued also to refurbish stores, and that program works on. So.
I'd like to continue with some questions on your online strategy. And you mentioned that you were flat now in November, but you have actually been down previously, year over year. What initiatives are you taking here to lift online sales, and what do you see in terms of the outlook for this?
No, I think as the comment was here, of course, that critical ratios is, of course, to work on your conversion on online and to make I mean, there are two ways in that. You make it an inspirational shopping experience where you're browsing, but you also want to make it easy to shop as well, go very targeted. So it's a very much online operation, and we have very good staff to work on that, to drive that. But I think the the key message for us, or the key for us, is also to look at the total perspective on that and to see how the online actually supporting the total brand. And the consumers need to make their own choices what they prefer, if they want to have it shipped to their home or if they want to go and find what the product and select the product, make a shopping list and go and buy it in the store. What we have not launched yet is pick up in store, and that is one area that we will release, etc. So there are still areas and there are still developments that we know is very attractive to the consumers that we still want to release to the market.
And how big do you think that pickup from stores could be compared to shipment to home?
Now, I think we'll see. Difficult to predict, but I think that if you look at trends in general, particularly UK is large in the omnichannel structure, pickup in stores is a key ingredient in that.
Would your stores be able to cope with strong performance in that? Or?
Yeah, of course.
Okay, let's see if there's some more questions from the floor. First here, Niklas.
Yes, can I just ask a follow-up on your like-for-like development here in the quarter? I believe it's almost 4 years now with the quite consistent like-for-like decline, and now it's suddenly reversed in this quarter, very much driven by October, and then November was a similar strong month. I'm just
August as well.
I'm just trying to understand how much of this is related to the new assortment, which you mentioned here from mid-September. How much is that behind driving this? And you also mentioned campaigns, and I'm trying to understand, are these temporary campaigns that have been slightly elevated in October, November, or do you feel that you're now at sort of a threshold where maybe sales are going to be a bit stronger than what we've seen in the past 4 years?
I think we will see, but I mean, if you look at the 4 years, and I think the perspective needs to be in terms of what is the climate we've been through, and if you take Sweden as an example, it is a somewhat more stable market at the moment, but it's not the performance we've seen in the quarter. When I'm mentioning campaigns, and you can of course see that as well in the gross margin, it's not that we are driving sales behind super sales or anything like that. So it's very much a stable part. I think we have seen a positive momentum in the marketing programs we've launched, and seeing positive effects out of that. Where the total market will go, I think we'll see. But I think we will continue to drive where we can influence. Now, we also have somewhat less or fewer new stores in the matured market as well, which of course is also somewhat supporting that you have slightly less cannibalization effects as well.
And on the gross margin as well, this 130 bp improvement. Going forward, obviously you won't have the effect of lower shipment costs, but currency effects, I guess, will also be impacting. So how should we look at that going forward? Is this more of an exceptional improvement in this quarter, or will, say for instance, the private label sales here, that increase, will that continue to lift your gross margins in the coming quarters?
I think that mix, the sales mix, is difficult to predict in a way, because of course it depends on what happens in the market and what the consumer chooses to buy. But you have some of the elements of freights and currencies, you can predict that. We will continue to drive the sales mix as we would like to see it, but of course that in the end depends on the consumer selection. Now, the private label, I want to mention that, of course, that goes in the right direction, but it's not also, for us, it's very much to drive also loyalty behind that and to strengthen the connection we have with the consumers as well. And if that goes up, it's not going to change the world for just 1 or 2 percentage points.
Okay, thank you.
Okay, let's see if we have any questions from the web conference. Okay, then I'll continue. Let's just discuss the outlook a little bit. Maybe firstly the new store target between 12 to 17 for 13-14. Where do you see these new stores, in which markets, and any other expectations here?
No, I think what we have announced, the target of 12 to 17 is there. We're going into the end of the period. We'll see if we're reaching that. We have 2 more contracted, and we'll see if we will get further contracts on that. But we will then be in the lower end of that scale. So we will in Q3 release a new target for next fiscal year, which I think is more interesting as we go along. But as we have communicated. In the mature market, Sweden and Norway, there are less room for significant more stores. There are still areas that we want to open up stores in, but not in the same percentage of new stores as we've seen historically.
What do you think is the expansion, potential in the longer term? How much do you have left in terms of percentage?
No, I think we will come back to guide on that in Q3 in terms of for next year. I think I save that for that session.
Okay, let's move on with some questions on your new markets then. You're on your way into Germany and you also have plans for the Gulf region. Can you comment on anything about the progress here?
We work according to plan in terms of for both areas and particularly for Germany. It's very much related to work on the range and to the assortment, to adapt and to translate. We're coming to an end in that process more or less, and now it's very much looking into to find the right location, to be selective about that. And when we do, we will announce that, and that sets some of the times for open up. But we want to be, we are keen on to get the right location, which is critical for us. For the Gulf region goes also in line with plan. We will work with the range of that is translated to the UK, so we have very much that in place. Working now with locations, with the partners, with the partner that we have, and I think so far we are in line with our expectations in terms of how we develop this.
May I ask you, how much are you adapting your assortment when you're going into a market like Germany or Kuwait?
Well, Germany is a little less. You will make some adaptation, particularly in terms of some of the brands, but there are less adaptation. Of course, the Gulf region will have some more. If we joke about it, the snow blowers will not be a key seller there, and some, of course, the winter range, and you will have some somewhat larger adaptations in that region.
Okay. And the costs for preparing this, anything you can say about that?
No, they are not in the big area, so that is going to influence some of the key ratios.
Maybe it's a little bit early for this question, but will you continue to look into new regions in the longer term?
No, the vision is very clear of that we have a unique, very strong concept. We have a fantastic platform on the base of the Nordics. I think one of the things of it that is strong and several strong franchisors are looking into this concept and want to take it to the region because they believe it's really a strong concept that will work out in their regions. So for us, the international expansion is there. With that said, as some of the comment here as well, that we want to take it step by step. We now have a UK that we start to see some improvements in. We want to go into the Germany with 1 to 2 stores, and we also then have our operating model of a franchise model, which is somewhat different in terms of own investments. So we'll continue to do that, but right now we have a full plate, I would say, in terms of new markets.
And what can you tell us about your new IT platform? How will that help you with the growth going forward?
I think it's very much in terms of course, the platform that we have. We have adopted some areas. We have now selected the software. We are now, as you call it, into the design phase where you're designing how to change and to make it gradually changing. Of course, there's a lot of efficiency expectations in that, but there's also something in terms of how we can use our system to grow faster and grow to use it in a more efficient way. So you will have some efficiency opportunities. Which is the new platforms will also give us more support in terms of monitoring and analyzing our own business, etc. So there are several benefits around that.
And when do you expect to have it fully implemented?
We are, and I think that's the clear message there is that the design phase will state that. So they are now working on that plan, and when you come out with that design phase, that goes so then for a time plan in terms of how we're going to roll it out.
Okay, thanks. Do we have any more questions from the floor? Yes.
Can I take 3 quick questions? Why is working capital so negative in fiscal Q2 compared to the same period last year?
Göran, CFO, why don't you?
Can you hear me? Yeah. I mean, what you see, as what Clas mentioned about inventory, that we have an earlier build-up of inventory before the Christmas sales. And that is the reason why we have an increased inventory end of October compared to last year. So that is something we have made a decision to do a bit earlier.
Okay, thanks. Thanks for clearing that out. Can I also ask you, in terms of inventory per store, you're actually down year on year from like 9 million to 8.8 million. So my question is, do you think you're properly, do you think you have a proper stock in trade ahead of the very important Christmas trade?
Oh yeah, I mean the of course a part of the that's part of becoming more and more efficient in the way how we operate and how we drive the stores. And I think the staff in the store is doing a great job to rotate and to be faster. We can see that works as well on the distribution center, and also you get some of that effects in the stores, which is also one of the things that will support us going further with a new IT platform down the road.
Interesting. And final question, could you give us like a ballpark number of how much of your seasonal stock in trade actually relates to like snow kickers and snow blowers? And if you like, please comment on Q2 last year or December.
I mean, if you relate it to November, then if you take it that, and I think it's easy to say that if we remember November last year was a bit more snowy, and we snow blowers and snow equipment was moving out faster than it has done this year, clearly.
Thanks.
Okay, I'll round this off with a final question on the Christmas sales, and if you could highlight which product you have the highest expectations for in the Christmas sales.
That's without being, I guess, too boring in that aspect in terms of the width of the range. And it's also, I think, that the most pleasing thing, if you ever go into a Clas Ohlson store on a Christmas, you always find something to put on the Christmas tree. Now, I think some of the comment wouldn't mind to have some snow, maybe to get maybe a snowblower under the. But jokingly said, I think that the whole range, we have. And I think that one of the things that we see a great development in the travel part is going good. We have the storage that is developing in the right direction now. If you put something on the Christmas tree, I would prefer to have some kind of a tool because I like that, and I think so I think it's something for everyone.
Okay, thank you, Clas. I'll leave over to you for maybe some closing remarks then.
Thank you, and I think that it's been an interesting Q&A, and I thank you for your interest, I would say, and thank you for coming. So I would just say thanks a lot, and I will also wish you a Merry Christmas, of course. Thank you.